Hey guys, Matt here. So you see the title of this video, you kind of know where we're going with this. Now, for those new to my channel, I am a Gevo shareholder. You can watch my playlist, which you can find up here if you want proof of that. But I also think it is very important every once in a while to look at the stocks that you own and the stocks that you like and assess the risks associated with them. And with Gevo, just ask almost anyone in the community and they will agree with you. There are most definitely risks associated with Gevo. And we're going to go over some of them in this video. And I want to start things off right here with the stock price itself. And you can see right off the bat that Gevo has not exactly had the best run of all time. If you look at by the day, it's 52-week. It hit its 52-week low today. It's been down by the day, by the 5-day. Gevo has not had a good day, a good month, a good half year, a good year, a good 5 years. Gevo has not had a good time at all. If we take a look, and we're just going to use Yahoo Finance for all this. If we take a look at the valuation measures, like none of these does Gevo look good. It's not profitable, and it's not going to be profitable for a while. So there's no PE to speak of. There's no PEG ratio. Price to sales is, yeah. Now, the only one that you could argue might look good is price to book. But, price to book, there are a few comments on that. With a price to book of under 1, you could say that the stock is undervalued. But you could also say that the company might be facing financial distress. And, yeah, I'm willing to go with a latter, at least for the short term. And I got another comment on, now, the price to book compares basically the equity to the stock price. And there's a problem with that we're going to get into a little bit later once we talk about their balance sheet. If you take a look at the yearly revenue, it is not going the right way by the year. Every year is worse and worse and worse. It started with the Laverna facility being shut down due to COVID and what they call an unfavorable commodity market, and it never got better. Net income, very much the wrong way. If you want to go by the quarter, like the last quarter was comparatively, compared to the other quarters, it was the first good quarter in a while. And even then, they still failed to beat analyst expectations, which we'll get to later. Yeah, revenue is not looking good. And net income is absolutely awful. You can see the picture I'm painting here. Gevo is not doing well. And it has the uncanny ability, at least I've noticed after buying it, that it just seems to take victory and find a way to snatch failure from the jaws of victory. Now, so far it's doing pretty well. But it seems to be it's kind of like a 90%er. We'll get to that in a minute. Now, at first glance, their balance sheet looks pretty good. And we're going to use the latest numbers here. It's got a lot more assets than liabilities, which is great, and it's got equity. Now, here's the problem with equity. Now, remember the price to book ratio here. Remember, a value under 1 could mean financial distress, or it could be that the stock price is undervalued. The equity here, a lot of their equity is actually paid in capital. This is money that outside entities are pouring into Gevo. So this positive equity here, it is all through paid-in capital. The company is not producing equity on its own, which is a bad thing, which is going to throw this number here way off. So without the paid-in capital, this will be much, much worse. Now, let's talk about the analyst expectations. Now, you may look here, and you may see that, wow, analysts have Gevo, 6,000% this quarter, and 1,700%, next quarter? What is going on here? And this all looks really good and really promising until you realize that, the past several quarters, Gevo has, on EPS, Gevo has missed every earnings except for one. And I know you can't see it here, but on revenue, they miss every single one. Gevo has not met revenue expectations since I bought them. So this right here, I'm not gonna you gotta take this with a grain of salt. You cannot hold this to any form of gospel. If Gevo makes this quarter, fantastic. This will be the first good quarter in a long time. But so far, Gevo has not done that yet. So I think you get the point I'm trying to make here. Gevo it does not look good in any way, shape, or form. Like people who are buying Gevo, they are not buying Gevo for how they're performing now. They're buying Gevo. I mean, the real reason they're buying Gevo is because they have a bunch of billions of dollars in contracts that are signed by a bunch of airlines. And in 2025, assuming Gevo builds the net zero on plant, they're going to start getting 2.2 billion or something like that every year. I don't remember the exact number. So yeah, there is a retort to that, but this is supposed to be a risk video. And so yeah, and in previous Gevo videos, I mean, I talk about saying that this is money on the table and stuff like that, and all Gevo has to do is build the net zero on plant. But I mean, that's the thing. Gevo has to build the net zero on plant on time. We don't fully know if Gevo is going to complete that or not. And if Gevo doesn't do that, if there are delays and all those contracts get delayed or canceled or something, all the the entire bull case for Gevo is shot. Everything pretty much rests on Gevo getting that plant built on time, and then the other plant, because they have to build additional net zero plants, on time and completed. I want to close out the video by talking about going back to the 90% thing that I mentioned earlier. So we're going to talk about the Gevo RNG plant. Now, this is the first thing that's supposed to actually get Gevo some kind of revenue, like the first saving grace for Gevo. Now, the plant was expected to go online in 2022, which it is. It's already there. It's already producing RNG and all that stuff, and it's already being. They already have a customer, BP, and that's already happening. And they're already starting to collect the revenue. So they're so close to actually receiving the money from this, the 16 to 22 million per year. However, I mean, there's a backlog at CARB. So it's not exactly Gevo's fault. It's more, the government and stuff. But I mean, it's almost there, but they just keep putting like little delays. Like the money is supposed to already be kicking in, but now it's being pushed back little by little. So I hope that finishes. I hope that, this Q2 2023 happens. But I mean, it is a risk that we have to consider. As a shareholder, I mean, I know I'm going to benefit from, government handouts and stuff like that, and environmental credits or whatever. However, as a libertarian, I don't like the fact that this company's early success is so dependent on government handouts. I would rather a company succeed or fail on its own merit, and Gevo does not seem to be capable of doing that. So yeah, despite everything I just said, I am long-term bullish on Gevo, and I am a shareholder. However, if someone who is just now coming into investing, learning how to invest, and they ask me for my not financial advice on Gevo, well, first of all, they must be very desperate indeed to come to me for not financial advice. But by not financial advice is to stay the hell away from this company. If this is your first year, don't come anywhere near Gevo. If this is your second year of investing, don't come anywhere near Gevo. Now, if you want a video, and if you want to hear me talk about a slightly more positive video in which I talk a little bit more bullish about Gevo, you can watch anything in my playlist, or you can watch the video linked at the end of this one. But anyways, take care, have a great day, and eat your vegetables.